So sorry to hear Charlie Kirk was assassinated today at Utah Valley University by some lunatic. So sad. He's only 31 years old. Wow. My thoughts and prayers are for his family. The Dow was down 220 points. The S&P 500 was up 19.30%. The Dow was down almost 0.5%. The Nasdaq was flat. After a rally that fizzled, the Russell was down 0.16%. The VIX was up 2%. We had a rally based on Oracle and on the inflation data. Now remember, the inflation data, sometimes one day is up and the next day is down. Still had a mixed bag in that the Dow was down, the Russell was down, Nasdaq was flat, and S&P had a gain of 0.30%. A new all-time high, but we're at neutral on the fear-greed index, forming a massive divergence with the S&P. I've warned you about this previously. We have new highs on the S&P. The fear-greed index has made a lower high, hovering near 50. Not even at greed. So again, similar divergence at the February high on the fear-greed index gave us a sell-off down to the April low before we hit the extremes there. When we hit single digits, we had readings of 3, 4, and 5. Bears were telling us, oh, we're about to crash with the tariffs, the launch of the tariffs. He was telling us we're moving into the next Great Depression, and the herd believed all of this. I told you we were bottom, we were at single digits. Now we have a divergence very similar to what we had over here. We're at a major trend line of resistance, all of them there in the weekly time frame with our log and linear scaling. Didn't believe we can rise at the April bottom. Now they don't believe we can fall when we're just straddling along the weekly trend line. VIX was up 2% today. We have a bullish falling wedge. This is a bullish consolidation ahead of a breakout. We've had the bullish divergence. Now we're likely getting a higher low. S&P's making a new high. The VIX is not moving to a new low, and there's a discrepancy. The Bollinger Bands are tight, telling us something big is getting ready to happen. That's what it's telling us. We went up to the 200, got above the 50, got rejection there. We pulled back to fill the gap. Now the S&P's made a new high, slamming into the trend line of resistance from the previous highs, and the MACD right here below the center line. I wouldn't be surprised to see a strong push on the MACD into the positive region. I think you get a very strong sell-off when this thing happens. The RSI is turned back below 50, but it's curling back up. You're likely going to see the RSI turn back up, the MACD turn back up, and you're probably going to see a pretty powerful sell-off. Because when the herd gets in denial and nobody thinks you can get a drop, and then you get a violent one as the herd starts, or the institutions start dumping these divergences, now possibly confirmation of higher lows, having a discrepancy with the S&P that has moved to a higher high. We have not moved to a lower low on the VIX. The moving averages are all coming together. If I bring it up close, you can see the 10 has gotten back above the 20-period moving average. They're both just below our 50. So again, we're likely going to see, we have filled the gap, probably a bounce here off the 20-period moving average, this blue line. If we get a big sell-off, massive rug pull, the herd's going to go, what happened? Because they don't believe the market could sell off. We've gone sideways for a couple months, slightly drifting higher on the S&P, and so far made a lower high on the Nasdaq. Bitcoin went sideways for a while after the July peak, but it eventually gave it a bigger dump downward. You're probably going to see the same thing with the S&P and Nasdaq. The PPI wholesale inflation had the biggest jump, the biggest increase in 3 years last month. It declined today. As I pointed out yesterday, sometimes, not always, but often, you'll see the inflation reports back to back, and you'll see the market rally with one and sell off with the other. It doesn't always play out that way, but often it does. Last month, we had the CPI come in, and the market liked that. It didn't like the PPI report. Right now we get this rally on the PPI. Do we sell off with the CPI report? You look at the headline number and the core number. Again, we've bottomed out with both, getting a higher low. We bottomed out way back over here in 2023. I was looking for that bottom for the CPI, but that higher low with the PPI, again, think I'm going to be correct, and we're going to end up going higher with both. But it ticked back down. The solid blue line is the PPI headline number. The dotted line is the core. Headline number at 2.6, the core number 2.7, both of them ticking down. The headline number came in at 2.6, as I just said. It was expected to come in at 3.3. The previous reading was at 3.3, so it came in better than expected, ticking back down. The core, on a year-over-year basis, came in at 2.8. It was supposed to be at 3.5% was the estimate. That's lower than 2.8, lower than the 3.7 previously when we got that big jump of 1%. I think with the headline number and with the core just over 1% last month is a huge jump, the largest jump in 3 months. The month over month came in negative for both at negative 0.1. Both were expected to be a positive 0.3%. Both came in negative. S&P rallying up back up to resistance. Nasdaq rallying back up to test the previous high. I'll show you the chart. We have the Fed meeting. So again, the Fed is watching the labor market, the inflation data. We had that massive revision by the Labor Department, sharply revising the jobs down. I talked about it yesterday by, what was it, 919,000, 18,000, whatever it was, by nearly 1 million jobs. Powell probably knew it was coming. The media all shocked. I'm not shocked. The media did their job. They would be reporting about all of the fake numbers that these people give us over at the Labor Department. It is outrageous what they do. Nevertheless, I digress. We're going to get the inflation report tomorrow. So the narrative is we're going to get a cut out of the Fed. But again, do we get a cut for the wrong reason? The economy is weakening. The stock market was looking for that Goldilocks number with the jobs report. They didn't get it. We've been seeing rapid deterioration in the labor market. We've got the CPI coming in tomorrow on Thursday, September 11th. It's expected to come in hotter, 2.9% for the headline number, higher than the 2.7. The year-over-year core is supposed to hold steady at 3.1. We're supposed to get the over-month numbers increasing by 0.3%. This comes in hot. If we see the wholesale inflation begin to start spilling over into the CPI, and again, that could be the catalyst, and there could be concerns that the Fed doesn't cut. The Fed could still cut, even if the market starts believing they won't, if the inflation ticks back up. But the concern for a sell-off, if inflation is ticking back up, is stagflation with the weakening economy and rising inflation. And again, we'll be watching to see what happens. The PPI, wholesale inflation, there's nothing to worry about, even though we got the hot report. We're moving up off the lows, getting a higher low. Told you I thought that we saw a bottom there with the April data. Told you going into that bottom, I was looking for inflation to bottom and begin to rise back up. I think inflation will rise back up. The Fed's been so concerned about inflation, but now shifting their risk towards the economy with the labor market and GDP. Here, when we were rising towards 9%, the Fed was not worried about inflation. They were telling us it was transitory. We dropped to a 4-year low. Now they're extremely worried about it up until Powell's speech at Jackson Hole. Still worried about it, but Powell said at Jackson Hole the balance of risks are shifting. So again, we'll be watching. Does the Fed end up disappointing the market? Inflation come in hot. Everything. This is a really important report we're going to get tomorrow. The headline number is supposed to tick up. So and the core is supposed to remain the same. So we'll be watching. If this thing comes in hot, there could be concerns that the Fed cut, concerns about inflation, concerns about really stagflation with a slowing economy. There's been more cuts on the table for this year. Surrounding the weaker jobs report, then away. We have the Fed Fund futures right now, 92%. The current target rate is at 425 to 450. The market is looking for a 25% cut, 0.25%, or a quarter of a point. And the odds of that are 92%. The chances of a 50 basis point cut is at 8%. There is zero chance at this moment, based on Fed Fund futures, that we don't get any cut. And again, could it be that we get a cut from the Fed and then it's one and done and they move back into the wait and see mode? Does inflation come up higher and it causes the Fed to be reluctant to take action? Told you again, we have a resistance directly overhead the upper Bollinger Band. We went up and hit it today and then closed right back below it. That's what we did back over here. We got a black candlestick on both the S&P and the Nasdaq. S&P came up to this trend line right here and slammed into it, stalled, and turned down off of it. It still rose by 0.30%, still up 19 points, but it had dropped off of the 65.55 high, giving back nearly half of the rally by the end of the session. We gapped higher, but you have a potential reversal bar, a black candlestick, slamming into this trend line. This is from the July 31st peak or August 15th peak. We exclude the shadow right here, and we slammed right into it. I've been talking about this trend line. If we include the trend line, if we include the shadow, pardon me, it takes us closer to that 2023 trend line, just directly ahead. Again, if we hit it, you're going to reach that 2023 trend line. We're just below it right now, hitting this trend line. I think we have an ending diagonal. It sure looks like that, with quadruple negative divergence on the S&P 500. Come down and break this trend line, also the trend line going back to May that I've been talking about. We had this bottoming tail. We got back above the moving averages. If we drop back below them, lose the cloud, the momentum cloud, lose the trend line there, then again, we'll be watching to see if we reverse with a potential ending diagonal, the the quadruple negative divergence now in play. That is the strongest. Triple and quadruple negative divergences are the strongest reversal signals in technical analysis. There's no other stronger signal than that. It's a multiple point divergence that often gives you a top or a bottom, and that's why those signals are so powerful. The MACD turned back up. We've had the MACD turn back up here, but we're forming this larger divergence. We had one back over here that gave us the sell-off for July. There's no confirmation of follow-through to the July sell-off. We've been drifting sideways on the S&P and Nasdaq. S&P making a lower high, S&P drifting slightly higher and selling off, drifting slightly higher, then selling off, drifting slightly higher. This is distribution as we're going into the rally, just floating higher, slightly going higher. It's giving the illusion that we have this massive rally that's taking place, and it's not. When we moved to the August peak, we were just 0.85% above the August 15th peak, just 0.85% above the July 31st high, just slightly higher, and then we sold off, back to the 20 period, back to the cloud. And then we moved higher, moved one bar above this high right here, got a failed breakout, and turned down. But we couldn't flip signals to bearish, validating that, and we turned back up. We got a bottoming hammer, and we turned back up again. We've been watching these trend lines, a trend line in the longer-term time frame from the May low. We're bouncing off that. Show it to you in a second. Been watching this trend line here. We slammed into today, and the trend line from the 2023 low. If we include today's shadow high, we were up 2% from the July 31st peak. We had a 35% rally since when I called the bottom back on April 7th. From here, from the July 31st peak, we've only rallied 2% higher. A 33% rally has been followed by another 2% for 35%, creating the illusion, and again, a peak here, turned down, a peak here, turned down, and again, we're likely going to see the reversal now and a bigger sell-off, giving the illusion that we're having this massive rally. And again, we've really been going sideways, just slightly drifting higher, forming what looks to be an ending diagonal. Well, Nasdaq's been going sideways, getting a lower high. It did go back up to test the highs, but it also got a black candlestick today. Nasdaq at overhead resistance, S&P at this trend line of resistance. And getting rejection at that upper Bollinger Band, at least so far. And again, this is what we've been seeing, rejection at the upper Bollinger Band here, and that gave us a sell-off, rejection at the upper band here, and then didn't reach it with this peak. Now we had it with this peak. We got rejection there and turning higher, rejection yet again. So again, we'll be watching See what becomes of the black candlestick here, given we have the CPI tomorrow. Could the CPI end up rattling the markets? Concerns about stagflation, or other the concerns that maybe the Fed doesn't rush so quick to cut if inflation is ticking back higher. We'll be watching this closely. Black candlestick here. We got one on the Nasdaq. I'll show it to you in a moment. And by the way, this what looks to be an ending diagonal, this little rising wedge pattern here from the August 1st low, really late July there. That's giving us this quadruple negative divergence. It's likely going to produce a reversal. We're just drifting slightly higher because we don't see a sell-off play out immediately in early August or mid-August or early September. Then the herd gets lulled into the false sense of security. Well, it's not going to happen. And again, it's creating the illusion that, from here, we're getting this 35% rally, and that's not the case. We've already had a 33% rally up into the July high, inching slightly higher, and we've only, in the last couple months here, since July, we've only rallied since July 31st, and I should say, rather than a couple months, I should say several weeks here. Since July 31st, we've only risen by 2%. We're seeing distribution take place. Again, retail investors are buying and the institutions are dumping. We've already seen that with the tech sell-off with the Nasdaq. We're going to see more of it. We're slamming into this trend line, forming this multiple point divergence. We also have the trend line here. If we include the shadow a little bit higher levels, that would take us closer to the 2023 trend line. Black candlestick, we may not make it. We're at the upper Bollinger Band. We may stall at this trend line right here. Now, again, we're hitting the trend line. If we exclude the shadow with that little potential rising wedge, you can see it right here, little potential rising wedge. I think it's an ending diagonal myself. This looks very similar to what we had back over here in the more recent price action of this divergence, or even the larger one. It's a larger divergence from July, August, and now September, very similar to what we had back over here in December, January, and February that ended up giving us this sell-off. Now, I don't think we're going to come back down and take out those lows, and that's it. But I do think we're going to get a bigger sell-off than what we've seen so far. Bars still remain blue here. Again, I'll be watching the peak over here from February 2025 here to see if that level holds as support or just below it. More support levels. I'm watching the 200 period moving average, the cloud. So just looking at Fibonacci levels. But again, my signals still remain bullish. They have to turn bearish if we're going to see a reversal, but we're slamming up into this trend line, excluding the shadow. We've been watching this trend line from the 2023 low. I've been talking about this a very long time. We slammed up into it in July and August. Now we're directly under it in September. We may not reach it, but I told you if we do end up reaching it, that would be the upside. And again, we have that wedge pattern, that little ending diagonal, but we're also bouncing with the trend line connecting this low from August 1st to our low here from last week, where we closed right on the trend line from the May low, May, June, August 1st, and then our low here in mid-August, and then our early September low we closed. We dropped below that trend line, and signals started to try to turn bearish, but they couldn't close that way. We got that hammer and that bottoming tail. We closed right on this trend line from the May low. You got to break that trend line if we're going to sell off. Now, again, upside, well, you got this trend line directly overhead. We're already hitting the trend line from the previous highs if we exclude the shadow, as we saw earlier in the video from the July 31st and August 15th peaks there. We're just at that trend line directly above that. You have this trend line. If we include the shadow, that's where this is pointing. We may not make it. We didn't make it over here. You have a black candlestick now that could be a potential reversal at our upper Bollinger Band. So if this rally fails, we need to come back. We need to take out this trend line right here, the red one from the May low, and we need to come back down and have signals validate a reversal if we're going to get a sell-off. Again, been straddling along this blue trend line, just slightly, gradually drifting, floating higher. It's creating the illusion that we're getting this. We're not. We're only 2% above the July 31st peak. So it's the tail end of the rally. Because we're going sideways, slightly drifting higher, it creates the illusion that you're getting this massive rally right here, right now, when, again, we've really gone nowhere after peaking at the end of the July rally on July 31st. And we do have multiple points of divergence in the 60-minute time frame here. We have multiple point divergences in the daily time frame, a quadruple negative divergence. Again, we've got this rounding type of a formation, which is often associated with a reversal or a bigger pullback. We also have the ending diagonal. Now, if we come back down and end up taking out the 200 and the 50 period moving average, we can start getting a larger sell-off towards the 200 period or towards horizontal support, which is the peak over here. We can start moving towards these levels for a bigger sell-off. I still think we're going to go up towards the 6,700, maybe the 6,800 level, depending on how long it takes us to get there with trend lines in the weekly time frame. Now we're hitting some trend lines, and again, likely we're going to see a pullback off of them. And the divergences, it could be a doozy of a sell-off. It could happen really fast and be a violent sell-off. As we've been going sideways, slightly drifting higher, herd is now completely convinced that there's a possible way the market goes down. Just like down here, they believe there's no possible way it's going to go up. We've been slamming into resistance for weeks. Lulls them into a false sense of security. As we hit this level, we hit major support, and they believed that we were all moving into the next Great Depression with the launch of the tariffs that week, and I told you we were going to bottom with the tariffs. We've been slamming into this trend line in the weekly time frame for a little while, but just drifting ever so slightly, just higher. Slammed up into it in July, and we've only moved up 2% since then. We've been slamming into this trend line for weeks. We hit it. We were rallying up towards it. July, we slammed into it, and then we've been drifting ever so slightly, slamming into this trend line from the 2022 high. Again, eventually I think we're going to this trend line right here, the black one, but I think you're going to pull back towards the 20 or the 50 period moving average here in the weekly time frame. Like over here, we're slamming up into the trend line right here, the black trend line, and then eventually you got a bigger sell-off, and then a much, much bigger sell-off. Same thing over here, back in November, and then on into December and January in 2022, late 2021 in November there, again, gave you a sell-off and then a rebound back up, but you were straddled along that area. People were convinced that there's no way that could happen. And over here, no way this is going to happen, but we're going to get the sell-off, but yet they happened. I still believe we're going to pull back and end up going to this other trend line. The herd is good and complacent, and that's a recipe for a rug pull. But then the dip is going to get bought. That's going to really cause them to believe when we get to a top, which I believe that we're going to end up going higher in the coming months ahead, and that will convince them, if we get a buy the dip event here, that there is no top. We don't have a top. When we form one, which is where I think we're going, is that 67, maybe 6,800 level if we take our time reaching it. This is our weekly log scaling. By the way, we're just overthrowing that trend line. Do we not close above it by the end of the week? We've been getting rejection at it each week. We're above it right now. We've been above it before. Do we get rejection at it and start getting a major sell-off this week going into the Fed, possibly with the CPI? I show you this trend line in the daily time frame. A little harder to see here in the weekly time frame, but we're just slightly under it. And again, been straddling along it here, and likely moving back to the 20 or the 50. Again, over here, when we were at key support, nobody believed, and this rising trend line, nobody believed that we could bottom. We're at this trend line, nobody believes that we can top. Eventually, I think we pull back and head towards this trend line up here, where I think we're going to bottom around 67, maybe 6,800. That trend line is where I think we're headed. Got this massive negative divergence at the NAAIM exposure index. This is what active money managers are doing as we slam into this resistance. And again, these divergences are extremes, or divergences at extremes, even as sell-offs. This one's not going to be any different. S&P's got a potential ending diagonal with quadruple negative divergence. I told you at the July peak, If we didn't get confirmation and a fall through, if we didn't see validation of the indicators all turning bearish and remaining that way, then you can set up a divergence. We ended up forming a quadruple negative divergence as we've been drifting sideways, very similar to what we had over here. Very, very similar to that. And again, it's likely going to give us a move back towards the cloud. If we go back to this horizontal support, our previous peak in February, you're moving back towards a 100 period moving average in the lower end of the cloud, maybe 200 period under that. We'll be watching. We're likely going to move, take out the 50, the green line, move towards the 100 or 200 period moving average. And then I think you're going to get the final climax rally after that going into the coming months ahead. Black candlestick with an ending diagonal with quadruple negative diversions. The herd believing there's no possible way the stock market can go down. What they were saying about Bitcoin in August, and it dropped 14%. It's recovering right now on a counter trend. Nvidia, the same thing. Nvidia helping the market today. Nvidia rebounded. If it went back up to fill the gap, it moved towards the moving averages. Nvidia had sold off 11.25%. We were told that wasn't going to happen. I told you it was going to peak and sell off surrounding earnings. It did. We should see the S&P follow Bitcoin and Nvidia down and follow their lead. This rising wedge breakdown, no confirmation to a reversal, the outline here in red, and now we have this potential ending diagonal here on the S&P 500 daily chart. It's forming multiple points of divergence here on the MACD, and we had a similar divergence back over here with the February top. I don't think this will be a top. I think we'll end up selling off and we'll have a major correction that will take us higher. It's the next rally after this one that I think you're going to come back, and you're going to come back to the April low. You're going to see a bigger drop than what we saw over here with 21%. When we go up here, you're going to see a drop sharply back down towards the April low. You're probably possibly forming a massive head and shoulders pattern. I talked about this previously. Well, Nasdaq's forming a broadening formation. At this trend line right here, forming what looks to be an ending diagonal in this little rising wedge. Nasdaq went up, got another black candlestick just underneath our peak from August 13th. Bitcoin peaked August 14th, the very next day after Nasdaq, just under that level. Got another black candlestick. We got one over here just above our 78.6 Fibonacci. So now you get another one. The moving averages crisscross back and forth. We're going sideways. Again, we may make a new high. Nvidia's not. Nvidia's moving back to the gap and the moving averages. Even if we make a high, we still have major resistance directly overhead on Nasdaq. But so far, S&P's made a new high. Nasdaq has not. It's just underneath this level where we got rejection on August 13th. It's followed by a 4.28% sell-off, and now we've overthrown the 78.6 Fibonacci, so we very well could make a new high. Nvidia did not. When Nvidia made a top recently with earnings, surrounding earnings, it made a lower high. It just came up to this level and it made a lower high. Do we get something like that? We'll see. A little miniature double top, or overthrowing this level and getting a little miniature double top if we overthrow it, and you have that larger broadening formation going back further. Nvidia's got the same pattern. Previously, Nasdaq turned off major resistance here from our 2023 trend line here. This is with the log scaling. We're not quite at that level. Testing overhead resistance. Well, the S&P is testing that rising upper boundary from the tiny rising wedge. It's slamming into resistance yet again with our linear scaling. We hit it before previously at the August 13th peak. And we're likely headed towards the 50 or the 20-week moving average here, and then go get one more push higher. We're watching. Do we do what Nvidia did? Make a slightly lower high, or Bitcoin. Bitcoin recently, when it peaked in August, it went just slightly above July peak. Do we see something like that for the Nasdaq? And that's exactly what happened with Nvidia getting a lower high and Bitcoin making a slightly higher high, but both turning up major resistance. Bitcoin dropping 14%. Now it's trying to rebound back up to the 50-day moving average, likely a counter trend, and Nvidia the same. And by the way, just be aware that we had this divergence with the Dow making a new high, the transports made a lower high, and there is a Dow theory sell signal there. Often they diverge. And remember, Dow did move to brand new highs recently here. We didn't see that with the transports. The transports peaked back in late 2021. We have this more recent divergence. the price action, but we are moving to a new higher here recently, whereas we're not with the transports. So again, likely going to see that play out. Remember, the seasonality is suggesting a September sell-off based on about 100 years of data, which is suggesting a peak on September 6th, which fell on a Saturday. So either this week or this week, the S&P moved to new highs. So a good chance we're going to see a peak in the market this week based on that seasonality. But back to the Nasdaq, again, it's got that massive broadening formation. Nvidia's got the same pattern. We're likely going to see a sell-off and then go higher, finish the pattern. Here it is on the weekly chart. Here it is on the daily chart. I think you're going to end up seeing a sell-off maybe back to this level, back maybe towards the 200, somewhere in there. And then I think you're going to get one final push higher in the coming months ahead. Nvidia was likely going to rebound back up to try to fill the gap here. We had another gap up here with the long leg doji. Told you again we could rally back up to the moving averages with our hammer. We talked about this. I told you we had possible back-to-back bullish candlesticks. We talked about that. Inverted hammer and the hammer. And I told you if we can rally, likely going to go back and try to fill this gap and rally back up to the 10 and 20 period moving average. That's what we've done. The 10 is now getting a bearish kiss of the 50 period moving average. So again, the rally is likely going to fail. We got a lower high over here. Does the Nasdaq end up doing the same thing? Now we have another gap to be watching. Today's gap on Nvidia. Nasdaq tends to follow Nvidia. That's why I talk so much about it. Nasdaq's forming a massive broadening formation. Nvidia is forming a massive broadening formation. About that at the bottom, the possibility of a large head and shoulders pattern or a broadening formation. Likely headed back, we got above the 50 period, but gapping higher. We're likely headed back towards this 200 period here in September. Maybe it drags out into October. Eventually, I think we go back up and we hit the trend line in the weekly time frame. I think that will be a top for Nvidia. Then I think it's going to drop 80 or 90% in the bear market. Putting up major resistance right here. Nasdaq likely going to follow Nvidia's lead, which now has a series of lower highs and lower lows. We'll see if we get another lower high.